Hello everyone, this is Kathy Lien coming to you from the CME NYMEX floor. We're walking into an exceptionally busy day in the foreign exchange market as we have the September non-farm payrolls report scheduled for release. NFPs is always important, but this month so much more so because it's the last NFPs before the next Federal Reserve quarterly monetary policy announcement where they're expected to start reducing their balance sheet. So in terms of the US dollar, non-farm payrolls can make or break the dollar because going into the NFP report, the dollar is actually quite weak. We had quite a topsy-turvy week in the greenback where it first fell and then shot higher and is now trading lower going into NFPs. And I fear that investors need to brace for disappointment because when it comes to non-farm payrolls, it's not going to be about just how good job growth is. It's going to be about whether it's good enough for the Federal Reserve to raise interest rates in December. And in order for that to be the case, we need to see non-farm payrolls rise by 180,000 or more, and we need to see wage growth rise by 0.3% or more, and we need to see the unemployment rate hold steady. Any part that misses, particularly that wage component, and it could be a big disappointment for dollar bulls and end up taking the greenback lower, not higher. Now, of course, if all three pieces of data are better than expected, and we actually do see wage growth, then we could certainly see fresh gains in the US dollar. In terms of the euro, because the euro will be sensitive to the NFP report, what we're looking for is, if we get a weaker number, we could see quite a bit of gains because next week we've got the European Central Bank monetary policy announcement, and the euro could be lifted by the recent hot inflation report that we had, as well as the prospects of some policy changes by the ECB. Like the Fed, the ECB is expected to start normalizing policy, and they take the first kind of next step, I guess, not the first step because the Fed's raised interest rates, but they take the next step by starting to taper asset purchases, and they could do so next week. So if we do get a soft number, euro dollar will be the pair to buy. If we do get a good number though, we could see the euro sink off its highs. Thank you so much for watching.